In this week's episode of the Stockscores Market Minutes, I'm going to show you how to measure day trading performance so that you can improve your performance in the market. Plus, we will do my regular weekly market analysis. We're going to look at the day trade of the week on KXIN and practice reading some charts with the Stockscores Market Scan. All right, so measuring day trading performance, or really any kind of trading performance. What's important is that we do so in a way that doesn't allow for bias in our analysis. It really doesn't matter how much you made on the last 3 or 4 trades, or how well you did over a certain market condition. What's important is that you collect data based on the rules of your trading strategy and test how those rules work over many different market conditions. So how do they work in a bull market? How do they work in a bear market? How do they work in a sideways market? And if you collect enough data, not only can you get a real sense of the performance of your strategy, but you can also look for ways to improve on that strategy. So we're going to look at a few slides here and hopefully see some of the tools that I use, and maybe they'll help you as well. So let's just jump into this. First of all, I always measure performance in reward for risk. And so this is a trade from Friday. The entry signal price was here. And again, this is all based on an algorithm. So it's not really human judgment, which is one of the things that takes out the bias. And the support price is there. So the difference between those two lines is what we call risk. Now this stock then goes up multiples of risk, which we call the reward for risk multiple. At the end of the day, the stock was up just under 8 times risk. All right, so that's how I measure performance on every trade. It's all done algorithmically. There's no human judgment, no human bias. I then take all of that data and I put it into a massive spreadsheet, and I can then track the performance of the strategy in half-an-hour increments. So, for example, on Friday, the 20th of November, between 10:02 and 10:30, my strategy generated 12 trade signals for a total profit of 42 RR, or reward for risk, which was an average profit per trade of 1.49 RR, and the maximum average was 3.5. All right, so now I've got some statistics, and I can see it for the day as well. This is the performance for the whole day. This is the previous day. You'll notice on Wednesday, the strategy lost money. It had a negative value there. And then Tuesday it was positive, Thursday was positive, and Friday was positive. Now I take those, or this tool, this spreadsheet that I make available to my active trader members so that they can analyze for their own self. And then I can also start to optimize. So I can go into this area of my tool where I can see what sort of average RRs and profits and percentage returns I can get over a certain time period. So if we stick with the 10 to 10:30 time period, I can adjust my indicators. These are the component indicators for my strategy. I can adjust those and try to optimize. So by making some adjustments, now I got the trade count down to 7 trades for that 10 to 10:30 time frame. The average RR jumps to 2.27. It was a $1,400 profit for capital required of $9,951, which represents a 14.22% return. And I can optimize for anything. I can optimize for a whole week, for a month, for a year, all different ways to optimize. I can add in things like market factor. So that's how I measure performance, but hopefully you see that it's not just about measuring performance. It's also about making improvements to the strategy rules so that I can improve the strategy performance overall. All right, let's get into this week's market analysis, starting us off with the U.S. markets. And here is a chart of the S&P 500. And you can see that we had an upward trend line there that got broken. Then we had one here that's being tested. And essentially what we're doing is we're sort of going into a sideways pattern. Now we can draw another pattern on here, which is called a pennant. So if I put a line across those bottoms and a line across these tops, that is a pennant pattern. And it's sideways, so therefore it's neutral. However, when the trend into a pennant is up, we expect an upside breakout. So for now, it's a neutral pattern, but if it can break up through that 362 level on the SPY, then we should see a resumption of the upward trend. Looking at the longer term chart, you can see that the bias is still upward. We have rising bottoms on the chart. However, we've been in this sideways pattern for 3 months now, and then short term, a little sideways pattern there as well. So again, although I'm generally optimistic about the market, I do need to see a breakout out of that trading range before we can have some faith that the market wants to go higher. Looking at the NASDAQ 100, similar sort of situation. It's been in a sideways range for a while. Again, another little pennant. And what we're looking for is a breakout, perhaps through 300 on the QQQ, as evidence that the market wants to go up. If we start to break down through 270, then I'm going to be concerned that there is more weakness. Now the small caps, which is represented by the IWM, this is actually in a little better pattern because it recently broke out and it looks like it wants to continue higher. So there is some action in those small cap stocks, and I would look at that for some opportunity. Onto the Canadian markets, and here you can see the TSX is generally in an upward trend in the short term, so we can be bullish on Canadian stocks right now, short term. Longer term, it's slightly good, but it does have some resistance that I'm concerned about. So although we're moving up in the last couple of weeks, I would be concerned that the upside is limited, so it's sort of a neutral situation there. TSX Venture stuck in a sideways range. The market is neither helping or hindering individual stocks. If the market can break out of this pattern, then we'll see better opportunities. Looking at currencies, actually we're going to jump to commodities. Let's take a look at gold. There's nothing major going on with currencies this week, so we'll just jump into gold. And we can see that we tried to break the downward trend line 3 weeks ago, and I actually put a bullish rating on that particular week. But we've fallen back since then, and I'm actually now concerned that we may break down through support, and if we do, we could see some more weakness in gold. So it's been a little bit sleepy the last 3 or 4 months. I thought we might see a little bit of a rally in early November. I've gone back to being somewhat neutral or even a little bit bearish on gold. Oil has made a little bit of a resurgence in the last little while. You can see a general upward bias. It is still stuck in this range, and it is still below resistance, but if we can break through 12 on the BNO, that's good. Until then, I'm relatively neutral long term. And finally, the fear chart, you can see that fear is falling, the tops are falling, and therefore fear is low. All right, so my outlook then, bullish long term still on US stocks, but short term neutral. The opposite for Canadian, long term neutral, but bullish short term. Gold, neutral long term and bearish short term. And oil, neutral long term and bullish short term. The upward momentum in the large caps has slowed, but there is increased action in the small caps, and that means there's alpha stocks that can do well, but you have to be selective with the trades you take. Every day I'm seeing big movers in the market, but you have to be picky to find them. Gold is testing support and could break down in the near term. Oil is starting to show a little bit of life, but still facing an uphill battle, and fear is low. All right, let's get into the day trade of the week, where I look at a stock that came up in the active live service that we do on Stockscores each day. And this week's day trade of the week is on KXIN. Entry signal right there, and breaking from low volatility. You can see the abnormal volume, the abnormal price action that we always look for. This stock had a really big run, went up as much as 16 RR. But the better thing about this trade was that it was very capital efficient. For $100 of risk, you only had to buy 450 shares, which was only $1,719 in capital. You can margin that trade 3-to-1 because it is a stock that is over $3. So you're putting up $573 to take this trade, and you can see at the end of the day, it was up just under 10 RR. That meant a $990 gain for $573 worth of capital. That's a 172% return on a one-day hold, a really awesome day trade. All right, let's jump over to the Stockscores Market Scan tool and run a market scan. What we're going to do is run the Stockscores Abnormal Breaks US scan. So this looks for stocks on the US market that are trading abnormally Friday. It found 44 of them, and I'm not sure if we're going to find anything good or not, but we'll just look through a few charts to think about what I like to look for when I'm analyzing these charts. So this is a real penny stock, and I don't think it's worth buying now, but what we look for was found right back here when we get these breakouts with abnormal activity, just like we look at for a day trade. abnormal activity from low volatility, and you can see the big gain that came. So now as we go through other charts, that's what we're looking for. Now here you can see abnormal volume and abnormal price action, but it's coming into resistance. So that is not a great setup. Moving along, there you can see some abnormal action, but not breaking from a predictive pattern. There is a little bit of optimism breaking a downward trend line. This was pretty good. I'd give it a 6 out of 10. But anyway, that's the structure. So that's what we do each day when I am looking for position trades and swing trades. All right, well, that has been the Stockscores Market Minutes for whatever we are here, November 23rd. Hope that you've enjoyed it. If so, click on the like button, leave a comment, subscribe to the channel, and most importantly, trade well.